Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Just wanted to do a quick update on Bitcoin. Looking at the 4-hour Coinbase chart currently, we've got our parabolic SAR with binary pivots, moving averages pulled up here. And then I've got the TJD, TDMACD, and the Jewel Thief here at the bottom. As we can see, essentially got the exact move that I spoke about yesterday. Everybody was extremely bearish. Bullish. We got that push back up to essentially like touch the top of the range and try to break out of the triangle. At which point in time, that was basically a big throw over. It failed to get above it, and then we sold back off. Lost the 89 moving average. Specifically spoke about how we're getting less and less of a bounce off of the moving average. So the next time we come down to it, I was expecting a rejection, as well as the 8 red moving average and 21 yellow moving average. We were getting worse and worse of a cross back to the upside each time, showing that the market was losing strength. And then eventually we would get the cross to the downside. Took place here. We broke down, attempted to get back above the 89, failed to do so, got rejected right here. Sold back off like pretty violently, at which point in time we took out a key level. Essentially what we're looking to see happen here is we have a low here, series of lows. We had a series of lows in this area, so you'd say we had a low here, we had a higher low, and what we were looking for to happen if you were going to remain bullish in these markets, at least on the short term, you did not want to see this come down here and put in a lower low. So when we were able to save this low here and get that bounce back up, that was essentially our last chance for this low to be higher than this low, to be higher than these previous lows as well. So now it is possible we get a scenario like this, but now in order for this to essentially just be our second low, we have to go now completely back and like doctor the entire charts, because it came down here lower than this, came down here higher than this low, but this low is micro part of this move right here. So here we have a high right here, then we have a low right here, then we have a lower high right here, and now we have established that since we put in this high, we have a lower low right here as well, but it's still higher than this low here. So it is still possible that we come back down here again and that we save anywhere higher than this low right here. So as long as we don't close on the 4-hour below 31,478, we can still argue that this is in fact, a triangle. But if we come down here and we take this out, it's going to look like, a descending channel where we have put in a high, a lower high, a lower high, a low, and then a lower low. There's no way that you can argue that's a neutral pattern or that it's bullish. Now you can at least argue that no matter how much this sells off down here, as long as it doesn't take out this low, that we're at least in a somewhat neutral pattern. Now, arguably, you're trying as hard as you can basically to stay bullish in this. What it looks like to me is a sideways consolidation. We now have like a base point right here, and we've put in a pretty solid base right here as well. So, you can look at the top right here. You can look at this as essentially just a liquidity event where we sold off so violently that we bursted out like the bottom of a potential pattern, bursted through the 89, but we're able to save it. But now it looks even more like this is just a descending triangle. We have a flat bottom support that's holding right now. We've came down to it quite a few times, and then we have a series of lower highs with a flat bottom. That's essentially just, that's sell orders eating away at a buy wall. We have a buy wall in place right here at that 34,000 range. It is propping up price while distribution takes place, and then once those large positions have been unloaded, statistically 66% of the time, that buy wall will either get eaten through or pulled, and then we'll drop down to our next level. And what the next level, like I said, would be is just somewhere above that 31,500 range, which lines up perfectly. We've lost all our moving averages now. We are underneath them on the 4-hour, down to our 200 exponential and 200 simple. So what we want to see is when this does roll over, when we get that waterfall effect down here, we want to see it hold at that 200 moving average. Now you'll notice here on the indicator oscillators though, this is one of the most bearish signs that ever happens. When you are below the slope line, the blue line right here, when you're below it with the histogram, but the slope is still blue, that's one of the worst case scenarios. That's a I mean, I would say probably at least 75 to 80% of the time when that happens, if we attempt to come back up to it, we'll get rejected and then we'll get that waterfall effect. So was this the attempt back up to it? Possibly. I would like to see it come back up and try to tag this slope line and then lose it. And at that point in time, I will, be extremely confident that we will be selling off. Because typically, once you fall down below that slope line here, as long as the histogram is below it, it should not stay blue. And yet here we are, you get like a short opportunity here where it's blue, we fall below it, but it's at like a strong slope upwards, and then we're able to burst straight back above it. But here we've fallen, came down, fallen drastically below that line, and now here it is somehow still going up blue here, which is not a good sign. That's a very bad sign. So that's essentially what I said about, there being a buy wall in place holding up price action. Now, if we look at the jewel thief down here, what we're essentially paying attention to is, we came down here with the blue, put in a low at that 20 zone, bounced up, put in a high, came down, put in a slightly higher low, and then came up and got rejected by the bullish control zone, the same way that we got rejected by the bearish control zone here. So now all this price action here is neutral. Prior to that, we were bouncing the 50, the support area here, and every time we were making it back into the bullish control zone. Here we got rejected basically with a short entry into the bullish control zone, but the purple could not even make it inside. So the blue was able to make it, the purple couldn't. Previously, both the blue and purple made it, blue and purple made it, blue and purple made it, and the blue was getting saved by the 50, blue was getting saved by the 50. Here we lost the 50 and came all the way down to the 20, so that was our first sign of almost entering the bearish control zone on the 4 hour, saying that the bears are in control, which the last time they did that was on the massive dump. So, we didn't want to see that, obviously. Came back up. The blue was able to make it this time into the bullish control zone, but the purple got rejected at the 80 line. And then again, we came back down here again below that 50 line, showing that we were not going to be able to reclaim that 50 neutral area as support. And then when we came up the following time, the blue got rejected before the bullish control zone, so we didn't even get our red flash here. So now we're selling off now, and what I assume is going to happen here, we could find support right here at this area and get a bounce back up. I would expect more of a lazy bounce back up to the upside. You'll see the blue is starting to curl up here. I would expect a lazy bounce like this, and then a rejection and continuation. And when we get rejected and continue down here, we will either get support at that 20 line or enter the bearish control zone, and we'll see that green flip over. So I'm paying close attention to that. Essentially, we already got the retest back up here to the 89 and got rejected, got a bearish engulfing candle. We're trying to save it again, putting in little wicks on the bottom here. We might get another one up here this time, get rejected at the 8, get rejected again at the 89, get rejected at the 21. I'll probably be in line with it, but it looks very clear to me that we're going to get a rejection. Now, bullish case scenario. We all of a sudden find strength out of nowhere. This thing just bursts to the upside, squish it, basically a big short squeeze, and comes all the way back up to that 36,600 range. But from where we're at now at 34.7, that's, basically a $2,000 move. We could come up as high on the 4 hour and get a close as high as 37.4 and still put in another lower high right here. But, once again, the market's not showing any strength. It's not showing any sign of support right here. It is showing some support, but it's not showing any strength. So, to me, it does not look like we're just all of a sudden going to burst to the upside and get bullish. Although it is possible, we do want to pay attention to that. You'll notice here we found the 528 as support both times. The first time we got the big move all the way back up to the 55 exponential. This time we're getting rejected at the 8. This is going to close, basically we're in a new candle, but we got rejected at the 8. So in the next hour or so, if we don't close above the 8 and get a pushback up to the 21 or get a pushback to the 528, it's just going to look, or 377, it's just going to look weaker and weaker. I'm not seeing any distinct bullish divergence or anything taking place that would show us we're going to get a powerful move to the upside. On the 1 hour, we are flipping over the blue here, and it has crossed below the purple. So it looks to me like we're going to be selling back off, off this rejection and coming back down to the 528. So we're headed straight back down to 3,400. It looks like. And you'll notice, just like we were talking about, to pay attention on shorter time frames for a trend change. And essentially we were getting, throughout this whole entire run up here, we've been getting all these red areas where the bulls were in control. And then here we got this pathetic attempt for the bulls to maintain control, and then the bears took over. And then we got a pathetic attempt for the bulls to maintain control, and then the bears took over. And now you'll see that, obviously up to here, the bulls were clearly in control. We're getting big, thick red areas of the bullish control zone. Then we got barely. Then we start getting a green pops up all of a sudden. And then now here's another green. And it looks like the bulls are just losing control on the shorter time frames as well as the longer time frames. Looks like this is just basically sideways consolidating. And then we're going to sell back off. Again, we could get a push up here, short squeeze, all the way back up to the 200 moving averages at like 36,000 would look reasonable. But again, it looks like the price action is pointing to the downside. Quite a bit going on here, but essentially when we started getting that violent sell-off right here, we basically started developing this channel. Green line support right here I put into place after that second low, and then the purple one I put into place after that second lower high right there. We came down. Every time we touched it, we got a violent sell-off. Here we tried to break above it, and you could almost start to get bullish on this thing, and then it sold off and found support, which started to look okay at the 0.5, and then of course it just violent sell-off. Couldn't stay above the ADMA. Sold off down to the 528, started to find support, and then at that point in time, I put the measured move in place. We started getting some pretty aggressive wicks, like getting bought up price action in this area. Even though this bearish engulfing candle came in like pretty heavy here, or this it's not really an engulfing candle, but it's a big thick bearish candle. As soon as that came in, and then we saw this pretty big green volume candle here, it sold all the way down to that 236, which essentially was from all the way to the top of the move. We came down to the 236 a second time. We had only touched it on this first sell-off right here, and then we came down to it this time. Once again, you got that reaction buy up off of it. We got a spike in volume here, the same way we got a spike in volume here. But the move back off of it, here we got a violent move back to the upside all the way to the 200s. Here off that spike, we barely got anything back to the 55, and then sold straight back down to it as well. So again, it just looks extremely bearish. We did get our measured move, which the measured move was all the way to 35,852. But in this case, it was slightly underperformed. Very close though, very close. In an overall bearish sell-off like this though, an underperforming bullish bounce or a dead cat bounce is not, it's not uncommon. It's actually very common to get an underperforming measured move that's counter trend. So if this does get rejected and comes back down here, we have our targets in place. We did start to develop. You can see pretty clearly on the hour, this green slope line here started to kind of come into place. If we turn it back to a longer time frame, it's more clear. But at this point in time, that green support line that we have in place is basically what we're counting on to hold up, hold up price action. If we lose that green, we're expecting a violent sell-off, the continuation of our measured move. And you remember that we said when we lost this channel here initially, the measured move would take us all the way down to 31,000. We got the initial measured move down to support, and then we had that descending broadening wedge. We hit the measured move on that, slightly underperformed. Kept going up here and put in this ascending wedge basically, and then when we broke down from that, we hit our measured move to the downside, and then again when we found support, underperforming measured move to the upside. So based on these underperforming measured moves right here and how close we got to getting the measured move the same way that we did right here, it looks like our measured move to the upside is done, and then we're just going to continue to see a series of rejections before price action just rolls over. So let's switch back over to the 4 hour and take a look at what's going on here. And you'll notice once again, you can look at the TJD OBV on balance volume, and you can see that obviously this thing is supposed to just always stay green, and there's always supposed to just be more buying based on volume getting added to the price and very little areas of selling in an uptrend. So here we had pulled away from price, pretty far away, went parabolic, consolidated, got a red area, pulled away from price, found saved it right here, got a little parabolic boom, and then failed. Came back up kind of lazily, started to sell off, and then we're able to find support all through here, that whole parabolic run up. And then, you'll see right here, we got a pretty violent sell back off into it right here. That was that little, sell off from 42,000 back down to 30K. And, that started to look pretty bad, like violence-wise, like that we were topping out. We got our reaction rally back up. But you'll see here, we basically just went sideways. And that's what makes me think that this is just like a bearish consolidation pattern. Because you don't want to see this in an uptrend. You want to see the slope to stay green and to see like some kind of rejection off of this. So when we got that violent sell-off down here, what I would expect to happen is potentially come up, get back above it, and try to flip it back over green again before sell-off. If we were able to save it and get continuation, that's great as well. But you'll notice now that we're starting to see more and more of this red, which is not good. It means there's more smart money selling taking place than there is buying based on volume and, based on price, obviously. So, and you'll notice here as well, exactly what we're talking about trend changes. You have a series of these red dots all throughout here on the VPCI and only a couple greens. The greens are like your best areas to buy. The reds are telling you that there's powerful moves taking place to the upside, but you don't want to be selling into them. And then once again, we get that violent sell-off. We print no red dots after that. There's no strength being shown, based on volume, based on price. We're getting no confirmation that this is going to continue to the upside. And then we get another series of green here as well, telling us that essentially this trend is starting to flip over to a bearish trend or a retracement. And then finally, these are all our volume indicators here. Obviously the massive volume came in. It was selling volume. The majority of the volume that we've seen, a massive spike in volume has been selling right here. So that's like your first sign that essentially this trend has topped out. And then we see a pretty consistent buying volume through the area. And then here we're getting another spike in selling volume. What we're looking for is for this to break through the trend. So we have a high on volume here. We have a lower high, a lower high, a lower high, a lower high. If we all of a sudden see buying volume come in and take this out, or more likely we see selling volume come in and take this out, it's going to tell us that this trend, this sideways consolidation, is coming to an end, and we can expect, a violent move to the downside. Or in the event that we got something like this, but it broke above, that previous volume, that we would potentially be moving back to the upside. And then, as long as volume backs it up, we're going to take that as a break of the consolidation pattern and, confirmation in that direction. So that's our 4 hour. We can switch down to the 1 hour and just kind of take a look at that as well. Same thing. Basically, all of our indicators are telling us the same thing. You can look at the intensity of these moves and then how many of the red or green dots we get. So here was a very intense red move and then, an intense green move, but very few green dots telling you we're still bullish. And then here we get a lazy move with red, lazy move with a couple reds, and then we get a very intense series of green dots down here. A move is very intense, come down and took out that previous low, and then also the amount of green dots, and then we get a very lazy red, very lazy couple reds here, and then look at the intensity once again on the greens, and then once again, very lazy red, and then again, an intensity on the greens. It's much more intense. And then, once again, come back up lazily, maybe get another red dot like this, but it looks more and more like the bears are taking over and that this trend is changing. When it's an uptrend, consistent uptrend, you would expect to see way more red dots and way more intense moves to the upside. When it's a downtrend or a consolidation, you would expect to see way more green dots and way more, powerful moves to the downside. So when it's red like this, you want to use the green dots as accumulation zones, areas to buy. When it flips, all through these would have been good areas to buy. But now that it's starting to flip over and we're seeing the intensity and the amount of green is on the downside here, now we're looking towards these reds as an area to sell, and the area of green is not an area necessarily to buy, as we're expecting to get, a series of, the green dots and intensity. So we want to sell the tops, rather than buy the bottoms. So we're basically looking to distribute, our crypto rather than accumulate more crypto. And once again, you'll see based on not only the regular volume indicator, but on like the 1 hour, when we look at the waddah attar explosion, again, we see this peak of red volume come in here, and then we see a lower high on the green volume right here, and then we see an even lower high on green volume, takes us up slightly higher, and then we start seeing, a second intense level of red volume, and it's just sort of tapering off, but the red is starting to take over, as we're like all through this trend here, we were getting quite a bit more green, and intensity on the green with small spikes of red, which were just violent sell-offs. Now we're getting consistently like a fair distribution of reds and greens, implying that essentially the trend is either becoming more neutral or strengthening to the downside. So paying close attention to that. One thing I did notice that I was really paying attention to as well, let's flip this up here real quick and kind of look at our Fibonacci levels. We had essentially this long orange uptrend line, and then we started paying attention to this support line here in blue. It's a little more clear on different time frames, but I want to show it on the hour because it illustrates it better. It's like a little too convoluted on the longer time frames. We basically were finding support, higher low, finding support, still a higher low compared to the previous one right here. But when we came down here, we essentially like retested that low on the 1 hour. So now once again we have like this blue is a series of basically like the same low. We have one right here, one right here, one right here, one right here, but we're still putting in consistently lower highs, telling us that the descending triangle is much more likely. And that was our move from that first spike down, that negative 20% move that we got back here. That was our move right there to the top. That was our Fibonacci. And you'll notice we talked about this in the video, the 786 in the last video. 786 we came down to, we bursted all the way back up to the 382. Then the 618, then we bursted all the way back up above the 236. Then we came down to the 0.5. Then we couldn't make it above the 236. Then we came down all the way to the 0.5, and we once again couldn't even make it to the 236. And then we came down again twice to the 0.5. Our next move that we would expect to get is going to be the measured move right here in red, all the way down to that 618 and retest this low right here. So I'm expecting the 618 move of 32,500 to 33,000 to be our next move. And then you'll notice also that we had essentially this ascending wedge right here. It's tightening, it's wide here, and it's getting slowly tighter. This could break to the upside. Bitcoin likes to break these wedges to the upside, but technically it has a favor to the downside. It's technically a bearish pattern. When we broke through that, off that last little push up here, we saw this strong rejection. We had talked about this ahead of time. We kept seeing these shooting stars come in and these rejections. This shooting star was confirmation that we were going to get a hard rejection. We basically moved all the way back up to the top of the pattern and then got sold off all the way back down to the midline, below the midline, and then we couldn't even get above the midline and started selling off. And then as soon as that happened, everybody, including me, looks at this and sees this is a resistance, support. We break down from it, find support again, and then once we put in this shooting star, the price gets hammered straight down violently right before it closed, and then we get a massive sell-off. When we broke that pattern, we would expect it to come back up and try to save price action. We got a very, very lazy move, and when we did, we would expect this measured move, which is the pattern right here, to play out. We came back down and found support on the blue, which was the bottom of our symmetrical triangle. Got a lazy bounce, and then sold back from it, attempted to get back inside the channel, and then look, our measure move played out right here, at which point in time we would expect to get a bounce. We did. We got a bounce back up, found resistance again at another key Fibonacci level. Once we hit that 382 and got rejected, we sold down to the 0.5, came back up, once again got rejected, came back down to the 0.5. So now the next measure move that we're paying attention to is the measure move basically of like this channel pattern right here. So it's from top to bottom right here. The measure move would take us down to the 786 in yellow right there, which again is going to be like that 33,000 range. But at some point in time, if we lose this pattern and it does not become, I had specifically talked about how this was the area I would be really looking for. Anywhere from like here as like a flat bottom support to essentially like, this area here, and then forming like a basically like gigantic descending triangle. and then potentially we could come all the way down to like 3,000, and 600 or 30,600, and then all the way back to the top, and we would just be filling out this descending triangle. That's exactly what happened at the 14,000 price range. It started looking like this symmetrical triangle. Everybody was talking about symmetrical triangle and how we're going to break to the upside. I came out ahead of time before it even happened and said, look, it's going to break down from here and we're going to get a descending triangle, a push back up. Then everybody else switched their chart to a descending triangle all over the world, and everybody was like, oh, it's still bullish, it's still bullish. We come all the way back up, got rejected again, broke from it, measure move, went down from 14,000 on the failed bull run all the way back down to 3,800 in March when everything crashed. I'm not saying we're going to go that low, but the measured move of this entire pattern, if that, and again, this is a while in the future because we're probably going to come down here. If what I suspect is right, we're going to come all the way down to 30,600 again, then we're going to bounce all the way back up and put in another lower high. It won't go higher than this one at basically 40,000. But if we have 42,000, we have 40,000, we could take out this one even and come all the way back up and hit 38,000 right here. It's going to look bullish to everyone again, and then we get rejected again. Then it's 36,000, 34,000, and it's just distribution taking place. But the actual measure move of this entire pattern, if that plays out, is going to take us back down to like that 26, 27,000 range, which is looking more and more probable. Not to mention, we have a couple gaps to the downside on CMEs. There's a lot of things pointing us to the downside right now. We don't want to get overly bearish right now, but it's looking more probable than not. I did want to point out something else. I haven't heard anyone else talk about this yet, but I did want to kind of point it out because to me this looks very crucial. In our previous tops, you'll see I'm looking at the waddah explosion here on the bottom. We had this series of parabolic greens to the upside. And then here we have a series of parabolic greens to the upside. And then here at that 14,000 top, we had a little less intense, but series of parabolic greens to the upside. So that was kind of telling me we were getting overextended. You'll notice also we consistently throughout the previous bull trend were coming back down and retesting that green line, but not selling into it. Okay, we were not crossing back to it, but every time we got far away from it, we came back down and retested it. Here we got a little far away from it too, a little overextended, came down to it, and then here we're looking very overextended. And again, if you look at the parabolic nature of the VPCI, the parabolic nature of the waddah explosion, the parabolic nature of the TJD OBV, these are all looking very likely to be like a topping pattern. And then if we also look at the actual volume that came in, you'll notice we were getting our highest volume spikes on the sell-offs. Highest volume spikes on the sell-off. Highest volume spike on the sell-off. So it means price was floating up consistently with low volume overall. And then once again, when we sell off violently here at that capitulation point, that was like an outlier in volume. Here when we topped out, that was an outlier in volume at the top, and then obviously, a shooting star. And then here, an outlier of volume at the bottom. So now here we're paying attention once again, and we have essentially an outlier of volume potentially at the top. So, and then if we switch over to just a slightly shorter time frame and we look at the daily now, you'll see once again, when we sold off, we got that massive volume spike came in, and it was a clear outlier on the daily. And then the previous top, this was our previous top at 14,000. We got these massive outliers, on the daily. Massive outlier on the daily here. And then if we go all the way back down, capitulation, massive outlier. And then it kind of just like faded down and put in divergence here. And then finally, the previous all-time high at 20,000 was the same thing as well. We didn't get any crazy volume at the top or anything. But after we capitulated down from it, after we got that violent sell-off here, we saw a massive outlier come in, come all the way down here, massive outlier in volume at the bottom here. So that's what we're paying attention to as essentially like trend reversal areas, is those outliers of big volume. So, we see big volume come in here at that capitulation back in March. And now, same thing here. We're seeing a massive outlier in volume here. We're not seeing it on the buying we're seeing tapering volume is pushing price back up, but then when we sell off, we're seeing massive volume come in. What that means is there's a combination of buyers and sellers. So we're selling off violently, and then it's getting bought back up because somebody is still bullish against the trend or doesn't want price to go lower yet. So when we see that taking place, we need to be very cautious, because you'll see here when we got the sell-off, this sells off and gets sold, sells off 20%, gets bought all the way back up, and there's still barely any volume like outlying right there. It's not crazy amount of volume. And then we kind of float up here on around the same volume, but when we sell off here, that massive amount of volume coming in tells you typically it's the end of that trend in the overall predominant direction. So we had a predominantly bullish uptrend for months, and then we see a massive volume outlier, tells me we're at the end of the trend. So, and the same as if we were selling off and then we sold off and capitulated or something, and then we saw a massive outlier like that, it would tell me it's the end of the downtrend, and now we're going to be potentially moving to the upside in the near future. So just paying attention to, you know, what we're being told right here by the charts and not my own personal bias. You'll notice also we have all green volume through this area here, and then we see a couple little reds come in, a slight green come in on these two candles. But now look, we have all these greens in a row on volume and on the candlesticks. Then we have a couple reds show up, less greens show up, and now we have consistent reds showing up, showing us that the volume and selling is coming in much heavier than the buying is. And if you remember from the video, we were talking about waddah explosion and how it works. What happens is, as the trend is strengthening to the upside, it flips this slope line blue. And when it's blue, it means that the volume is picking up and the intensity of the buying is picking up. The trend is strengthening in that direction. And when it flips over yellow, it means that we're losing the intensity of the uptrend. And then when this flips over red, when it flips over blue and there's red behind it like this, it's going to start going back to the upside, and it's going to be showing that the intensity of the selling is picking up. And you could tell we had a very steep slope here, intensity of buying, then we have a loss of intensity of buying, and when it comes back down low enough, the same thing's going to happen. You know, we start losing the intensity of buying, we start seeing more selling come in, and then it flips back over blue here, starts going to the upside. So if this starts selling off right here and keeps going long enough, it's going to flip back blue, but it's going to be saying that the strength of the selling is increasing, and that's the, you know, basically the trend is over. So we're paying very close attention to that. What's potentially happening right here. This is starting to look very clearly like the end of a trend, so we need to be very careful. Also, we had spoken about the altcoins and what they were really starting to look like as well, and you know, what we could potentially expect from them. Another thing that's sort of alarming to me that I noticed is typically when Bitcoin sells off in previous bull runs and price action wise, when Bitcoin sells off, it will sell off say 10%, but alts will sell off like 20%. This time what seems to be happening is Bitcoin is selling off like 10% and alts are selling off like 10 or 12%. And then the alts are rebounding more intense and more violently than Bitcoin is. So what does that mean? It means people are overly bullish on altcoins in relation to Bitcoin, because everybody knows Bitcoin is the market mover. Bitcoin is the fundamental, is the crypto, is the blockchain that everything else is built on and piggybacks on. You know, so when all the kids start getting overly bullish on, you know, fundamentally like shit coins or whatever, you know, I would expect some cryptos to have lesser selling take place, or more strength, or more strong hands. But when you see the entire market selling off either less or around the same as Bitcoin, that tells me that a lot of people moved into altcoins and are expecting some kind of altcoin rally that may have already taken place, and that it's going to take a strong or powerful or capitulation event, you know, to basically chase them out of their positions. And that tells me there's overly like exuberance in the market. Because typically what happens is early in the bull run, everybody goes into Bitcoin. Bitcoin outperforms everything. And then as the volume of Bitcoin and the price of Bitcoin starts to get too high, it's harder to move it up to the upside. So what happens is, you know, a lot of like smart money will move into smaller cap coins and then break them out to the upside, and they will outperform Bitcoin. So I think this time a lot of people moved into altcoins expecting them to outperform Bitcoin, and they have. A lot of them have outperformed Bitcoin, but I'm not seeing like that buy pressure come in. And Ethereum's failure the other day, is a pretty clear symbol to me as well. Especially when I see a bunch of of trash bag coins that have not even reached their all-time highs again after years. Basically like with strong hands in comparison to Bitcoin. I would rather see strong cryptos sell off less or around the same as Bitcoin, but weak cryptos to sell off more, because it tells me that smart money is involved, and the smart money is saying these are good coins, they're good cryptos, they have strong, technical charts or fundamental charts. But when I see a violent sell-off on Bitcoin and then, a violent sell-off on an altcoin, and then it immediately rebounds to like a higher high or the same high or whatever, and Bitcoin is not, it shows me that people are overly bullish on cryptos that are only going to do what Bitcoin does. Because if Bitcoin starts selling off, they're going to sell off. And if Bitcoin really starts capitulating like it did here, when we got that 20-30% move, they're going to sell off more violently. They're going to get, stop loss are going to get hit. People are overly leveraged. That's not what you want to see. You want to see Bitcoin be, like the gold of crypto. You want to see it be the one that holds its value, that stays the strongest. And then you want to see like the altcoins act more like silver or copper with higher volatility. So when we pump, they go higher. When we dump, they go lower percentage-wise. You do not want to see altcoins staying stronger or acting more bullish than Bitcoin after a dump. You do not want to see dead cat bounces coming in that are more intense on altcoins than on Bitcoin. That tells me that there's a lot of dumb money spread out, and when the reckoning happens, it's going to be big. It's going to be brutal. So I'm paying attention to all these factors. I'm not saying there's not a possibility that we could still stay bullish and move to the upside, but until we at least, until we can take out like 38,000 convincingly, or take out, 40,000 convincingly, I don't see anything in these markets telling me that we're going to get continuation to the upside. I think we're going to consistently see lower highs. And in the event that we get a low close lower than this 31,000, at least then we could argue this is our top, and then we got an A, a B, and then a C correction. But if we don't even come down and retest this low right here, it's going to be very hard for me to get bullish in these markets based on what everything is telling me. But remember, just pay attention to the moving averages on shorter time frames. If we cannot cross the 8 above the 21 on a short time frame, we're definitely not going to do it on the 4 hour if we can't do it on the 1 hour. And if we stay here long enough, we took advantage of this 21 daily quite a bit. We had 1, 2, 3 buys off of it, a 4th buy off of it here, a 5th buy off of it right here. We saved it right here, but as long as we can't even get above the 8, the first time we sold off, we got back above the 8, for 1 or 2 candles. Now we're just right in between the two, and they're just going to keep tightening up, and it's starting to look more and more like this right here, or this right here. If we start closing below the 21, we're going to drag this down, we're going to get the cross. And when that 8 and 21 cross, that's when like bots and algos flip to the downside, and then it's going to look like that 28,800 target is imminent. So, and then of course as well, TJD, TDMACD, we have all these red histograms and one green one, and now the histogram is lower than the slope line. So, we spend too much time below that slope line, and it's going to flip this over red, and that looks extremely bearish, and we get the dump. If we can save it, or at least come back up to retest it, and get back above it, we could get our continuation. But, until those things happen, until something happens that tells us it's bullish, until we come back up here and take out this parabolic SAR at 40,000, we're clearly in a consolidation sideways downtrend. And then once again, we got the hard sell. We left the bullish control zone. We got our cross. We're selling off violently. Slope is intensifying to the downside. We might find a bounce right here at that 50 level, that neutral level, and try to move back up. But if we continue selling off and start doing it violently, it's going to be very clear on a long time frame that the bears are in control. We have not seen intensity like this anytime recently. So, and even through this whole consolidation phase right here, you know, we still never broke below the parabolic SAR, and we kept all the green going right here. Here we have a clear red, you know, out of character parabolic SAR, and the last time we did that was when we dumped down from that head and shoulders, and we dumped all the way back down to the 200 moving average. So even if we come down to the 50s, that's 28,800. If we come down to the 89, that's 25,300. But if we come all the way back down to the 200s, like we did here, the last time this series of events happened, if we light up the bearish control zone and come down here, I mean, the 200 moving average right now is at 20,000. You know, if we come down here and retest 20,000, it's going to look bullish overall for a move to the upside and everything, but that's going to shake out a lot of people, and it's going to be tough to get continuation after that because I think so many new people are in this market. But it'd be like the ultimate shakeout, honestly. So we'll see what happens. You know, don't get overly bearish right now, but it's definitely time, if you haven't already, to start taking some crypto off the table. At least that's what I'm doing. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Well, there you have it, guys. Crypto Trend Trader. Nice little in-depth update, multiple time frames. Just telling you what I'm seeing right here, and it's looking more and more bearish by the day. So pay attention. Don't get caught up in fundamentals short term. You know, fundamentally, Bitcoin is still strong long term, but technically, crypto is looking weaker and weaker by the day. And the strength that we're seeing in altcoins, you know, is really making me think that that's not good for Bitcoin. There's possible that all this money flows back in to Bitcoin and we can get continuation and leave the alts behind again. But we dropped down below $1 trillion in combined market cap. Bitcoin dominance is at that key support area. Well, I did want to show this off as well. Everybody is extremely bullish on altcoins because of this little move right here. But if we pay attention to what's happening here, we have two potential scenarios happening. We have like a top right here and then an A, B, C corrective pattern. You know, where we could essentially be like the A was down here at the bottom, the B was at the top, and then the C is going to take us lower. That would imply a, you know, weakness in Bitcoin and a massive altcoin rally, which is possible for sure over time. But, you know, that last Bitcoin sell-off was from September to August. So, you know, you're looking at basically months and months and months of altcoin rally, you know, where Bitcoin was losing strength against altcoins. And then we have a short period of Bitcoin gaining strength here. So we would expect a long period of time, you know, the next like 2 years of, or a year plus of, you know, Bitcoin losing market cap, which would imply a long, you know, bull run, you know, where Bitcoin gets outperformed. The other option, which I think is more likely, is that when we came down here and bottomed, you know, on Bitcoin dominance at 57%, what happened then was we got a 1 move up here and a rejection off the 200 exponential. We got a 2 move back down right here. We got a 3 move all the way back up here at 74, which I, you know, called out ahead of time. And then when we came down here on the weekly, you know, Elliott Wave says that the 1 tops, the 2 bottoms on the retracement, the 3 tops, and then the 4 cannot come down below the top of the 1 on a longer time frame in highly leveraged markets. So on the weekly, the top of the 1 close, you know, on the weekly was 65.65%, and that's where we're finding support, and we're bouncing off the 21, and we flipped over the 8 above the 21 right here. So it looks to me like Bitcoin is basing out right here off the top of the 1, and then we're going to get a 5. So we have a 1, 2, 3, 4, 5, and if you put the measure move in place and, you know, assume that we're going to get roughly the same move as we got off the 3, or if we just use our Fibonacci extension tool, you know, that's essentially going to take us up here somewhere in like the 77-78% range. So that implies one of two things. Either Bitcoin's going to break out to the upside and gain strength on altcoins because it's going up faster than the altcoins are, or Bitcoin is going to break to the downside violently and it's going to maintain value and increase in value in relation to the altcoins. So the altcoins will dump hard and Bitcoin will dump less hard. And based on the amount of distribution right now that's taking place and the way everything looks and the strength that the altcoins are holding, and then also that they are like making up almost 35% of the market right now, if we sold off right now, that would make me think that Bitcoin dominance could easily break to the upside. But if we just started breaking out to the upside right now, I'm less inclined to think that Bitcoin would gain that much market cap dominance. I think the altcoins would stay strong because people are still very optimistic about like massive gains and a massive altcoin rally. So, we have our fib extension targets up here, paying close attention to what's happening and what's potentially going to happen. Let's look at the crypto market cap. You'll notice we are, again, this on the weekly long time frame chart. This is extremely bullish right here. And then, we got bought back up here once we took out the previous all-time high. And now here we are failing to take out the high. So far red. We still got like 3 or 4 days left in the week right here. So, we could easily just move back to the upside and it's going to look like something like this and then consolidation movement up. But if we see a big red, candle come in, if we sell down to like $850 billion dollars, it's going to start looking more and more like we're topping out right here. And if we take out this parabolic SAR, it's really going to look like we're topping out right here. So paying close attention to this, paying attention for some kind of divergence to peek its head into the markets and, get a better idea as to what's happening. So there you have it, guys. Crypto Trend Trader. And I'm at, before I go, make sure you like and subscribe to the channel if you like the content. And, if you're just a Moonboy and you want somebody to come on and tell you every day about how crypto is going to a gazillion dollars and it's only going up and buy every dip, there's a million channels for that. If you don't have time to learn from what I'm putting out right here, that's fine. Go watch one of the other million channels. If you want to actually learn and become self-sufficient and be able to learn what I'm doing and how to identify these patterns, how to use these indicators, that's why I make these long, in-depth videos. I don't have to come on here and spend an hour of my time every day like sharing my knowledge. I enjoy teaching and I'm trying to help the community, to learn how to do technicals that you can apply to any market, not just crypto, versus like just coming on here and talking about fundamentals and how everybody's buying up all the Bitcoin and there's no more Bitcoin left. And so your Bitcoin's going to be, worth a gazillion dollars because there's no Bitcoin and everybody's buying it. Well, it doesn't look like everybody's buying it. It doesn't look like it right here. So I don't know. Just throwing that out there. Make sure you like and subscribe, for a real content, real technical analysis, and real potential price targets. So, and when we start moving back up again, you'll get bullish videos out of me again. But until then, I'm going to tell you the truth. I'm always going to tell you the truth. So, Crypto Trend Trader, and I'm out of here.